Let me ask you a question. What's your credit score? I know mine. Do you know yours? If you're looking to borrow money for a mortgage, the first thing the lender will look at is your credit score. And what that credit score is may decide whether they agree to lend you the money and at what interest rate. Yes, folks, it is that important. Credit scores range from 300 to 900, and the higher the better. If you have a credit score between 300 to 600, then most lenders will consider you a higher risk borrower and you'll either be rejected outright or charged a higher interest rate. Between 600 to 650 is considered fair. 650 to 750 is considered good, and 750 and above is really good. I personally use Credit Karma to check my score as it's easy and it's free to use. Now let's discuss some of the things you can do to increase your credit score. Number one, pay your bills on time. When lenders look at your credit report, they want to know how reliable you are to pay back the loan, and your past performance at paying bills will give them a good idea of whether you'll pay them back in time or not. Number two is credit utilization. This is the percentage of money you have loaned compared to your max amount. The easiest example is, let's say you have a credit card with a $10,000 limit, and if you're maxed out and only paying the minimum payments, the lenders will look down on you. You're better off not using more than around $3,000 or 30% of your max credit available to you. Number three, applying for too many loans or multiple inquiries. When you apply for a mortgage or a loan for a car, the lender will create a hard inquiry on your credit report. Too many of these can negatively impact your credit score, as it looks like you're trying to borrow a lot of money at the same time. The impact will fade over time, however, the hard inquiries can stay on your report for over a year. Number four, not enough credit history. Lenders prefer borrowers to have a long track record of paying back loans. So the longer you can show you've been borrowing and paying back the loans, the better. If you have an old credit card that you don't use, don't cancel it, as this could work against you by shortening your credit history. Number five is credit mix. Lenders would prefer you to have a mix of debt from mortgages, credit cards, or even lines of credit over time. This shows them that regardless of the debt, whether big or small, you're more than capable of paying it back on time. Number six, credit cards or loans with major banks. Banks tend to be choosier with who they lend to than some credit card companies. So even though you got a credit card when you went to the local grocery store, having a loan with a major bank will add weight to your credit score. Also, a bonus tip, folks, is to download your TransUnion credit score, as it's more detailed than Credit Karma, and dispute any inaccuracies with them, as any errors in the report will drag down your credit score. Usually these are corrected within a few weeks. I hope this information helps, and as always, please like and subscribe to be notified of new videos, and please feel free to reach out or leave a comment if you have any questions.